Mortgage-backed securities continue their rally today after we get more news that seems to show that the Federal Reserve's moves are starting to actually take shape here in the economy. Things look like they're starting to actually slow, and the Fed might actually be noticing that, which is good news when it comes to the moves that they're going to make to the Federal Reserve, the federal funds rate here in December. We're going to take a look at how that's affecting our home loan interest rates today on the Brent Bruce Daily, which I think you're going to be pleasantly surprised at where our rate is today. And we're quickly going to jump over and take a look at FHA and VA interest rates today because we just haven't done that for a little while. This is the Brent Bruce Daily for November the 16th, 2022. It is 3:41 p.m. Central Time. Okay, so we're going to look at an article here in just a second here. But first of all, let's preface what we're trying to accomplish. The Federal Reserve is increasing the federal funds rate because inflation is out of control. The prices of things are going too high too fast. So they are trying to do what they can to slow the economy. The way that they do that is they increase the cost of credit through the federal funds rate that trickles out and actually ends up hitting the consumer. Okay, so if the consumer starts to feel that there's a constraint on their money, they spend less, right? That is actually the goal of the Federal Reserve right now, is to get people to spend less money, buy less product, leave more product on the shelves, which will then slow inflation. Okay, so if that is what we're looking for, and we open up CNBC and we get an article that says that Target made warnings. Okay, so the S&P closes lower after Target's warnings drag on retail stocks. Well, what is Target warning about? They're warning that they don't think that their sales are going to be as strong as they were either last quarter or last year. And then, of course, maybe their profits as well. So they're putting a warning out to their shareholders that things might not be as rosy as they were last year. That would be good for slowing inflation. So this is something that we look at as we know more and more about how things work in the economy and also how they're going to ultimately affect mortgage-backed securities and home loan interest rates. You're looking for that kind of news to show that inflation is beginning to subside and the effects of the federal funds rate increases are starting to take effect. Now, what we also want, though, is that we want the Federal Reserve to not move too far. We don't want them to go too far too quickly with the federal funds rate, or they might just seize up the economy altogether. Now, they've made some pretty aggressive moves this year. I mean, I would say very aggressive moves this year. But let's take a look down here. So Fed Waller says he's open to a half-point rate hike at December's meeting. This is what we want to see. We want the Federal Reserve to increase the federal funds rate in December by 0.5% or 0.25%, not 0.75%. We need them. We keep on showing this kind of chart, this increase and then kind of this drop off. We need the Fed, now that they've made this run up in the federal funds rate, at least level it off, right? So they need to stop this and they need to level off, and then eventually they will begin to come back down. Okay, so if they go up by a half, then that shows that they're going from this to maybe more like this. Okay, so this is good news for us in the mortgage-backed security world because we think that they're feeling that inflation is starting to come under control. All right, so let's take a look and see where we are in the mortgage-backed security. Okay, so we have had some very good days. We're currently up 30 basis points on the mortgage-backed security that we're following. It is now 3:44 p.m. Central Time, and the bond market and the mortgage-backed security market closes at 4 o'clock p.m. Central Time. So we're almost done for the day, which is good news, and this is why. Let's take a look at the chart here. So we know that we have been battling the last few days with this Fibonacci level at 100.534. Now we banged up, bang, bang, bang. Okay, so we could not break above and stay above this number here, this Fibonacci level, which makes it a ceiling of resistance. It will put a lid on the increase to the mortgage-backed security pricing. It looks like we have convincingly broken through that ceiling. If that is the case, and we can stay above it for maybe 2 days in a row, that will make this now become a floor of support, which would be very helpful to us in our run-up in our mortgage-backed securities. And what we really want to see is making home loan interest rates come back down. Okay. So this is very good news. And it's good news because it's only 15 minutes away from the market closing, which means we don't have a lot of time for it to bust back down and run back down under that ceiling. Okay. So that is good news. Now take a look over here at the 10-year treasury, down 11 basis points. This is awesome. This is really good news. You guys remember, we were at 4.2, 2 weeks ago? So this has been a great run. We really like that. Now, what really matters to us? What really matters to us is, how is this affecting our home loan interest rates? So let's take a look and see what's going on with the Brent Bruce Daily. So let's take a look here at our market trends real quickly. The trending market data shows that a conforming 30-year fixed is about 6.6, FHA is about 6.5, VA is about 6.4. But we have something better than that. So let's take a look at the Brent Bruce Daily, our very well qualified 30-year fixed conventional home loan. And yes, these are the real rates that we are looking at here today that we would offer for this client. 6.375% with a credit. How long has it been since I've been able to say that we're at 6.375 with a credit? It's been months, right? Let's open this up and see what it would take to get to 6.25. 6.25 is going to cost you $853 on this scenario. That is awesome. And check this out. What if somebody says, you know what, I really want to be at in the fives? 5.99 is costing barely more than a half of a point. We're in the fives again for just over a half of a point. This has been an amazing run for us. Okay, great news. And this is based on this scenario here. Then we're going to take a look at FHA and VA. Here's our scenario. This is a conventional home loan for compliance purposes. That is what we are looking at. Now, so let's go ahead and let's make this an FHA loan, and let's make this 96.5%. So that is 3.5% down. And now let's click submit. All right, so everything else basically the same. FHA, 5.75% with a big credit here. Now look at, this is a different bank, right? American Financial Resources. That's the advantage of being a broker, is that I work with multiple banks. We're not only using one bank. So let's open this up and see what would happen if 5.75 is right here. Well, for $617, you're at 5.625. So we're getting into the mid fives for less than a point. So 0.7 points, we're at 5.5. We're in the mid fives again on an FHA home loan, which is outstanding. This is great to see this happening. Let's modify this same contract here or data here to 100% financing on a VA loan. All other of the parameters being the same. Where are we on our 30-year VA? 5.75%, just about the same as the FHA. Let's open this up just to see what would happen if we wanted to buy a little bit. Same thing. For $643, we're at 5.625. So as you can see, we have had a great run. I would say that basically we've gone down almost 1% in interest rates on most all of our main products in really a week, maybe 2 weeks. This is excellent news. Make sure that you're talking to your clients about that. Make sure, again, that you like, subscribe, and share. If you have any questions or comments, anything else that you would like for me to discuss, please let me know. I will try to get that information out to you right away. And check the YouTube channel, because I did put a video out for our customers and for consumer-facing information about what are points. Okay, so we talk about points every single day. Well, what are points and how do you calculate them and how do they work? There is a video for customers about that topic that I put up a couple days ago. So take a look at that. Let me know your thoughts. Have a great day, and I will see you tomorrow.